The Government of India is pursuing the target of achieving 500 gigawatts of renewable energy capacity by 2030. Today, we will be analyzing one such company that is involved in financing this sector particularly. Welcome to our YouTube channel Stock Updates. Today, we are diving deep into the fundamental analysis of REC Limited, an integral player in India's financial landscape. Established in 1969 with a mission to enhance agricultural infrastructure, REC Limited has evolved into a powerhouse registered with the RBI as an NBFC, PFI, and IFC. Its nationwide presence and pivotal role in financing projects across various sectors make it a cornerstone of India's development. REC operates primarily in lending to power, logistics, and infrastructure sectors. With 98.18% of income generated from loan assets, it's clear where their focus lies. India's dynamic energy sector and REC's strategic positioning within it paint a promising picture. The nation's robust economic growth, coupled with a push towards renewable energy, sets the stage for REC's continued success. Now, let's crunch some numbers. REC's revenue has shown steady growth, with a 4-year CAGR of 11.66%. Similarly, net profits have soared by 18.10%, showcasing a financially healthy organization. Despite slight fluctuations, REC's profit margins remain impressive, outperforming industry averages. Its ability to secure funds at competitive rates underscores its profitability. Return on capital employed and return on equity reflect REC's prudent financial management, albeit with slight variations attributed to debt-equity dynamics. With a debt-equity ratio of 6.55 times, REC's borrowing strategy aligns with its business model. High debt is not a red flag for an NBFC like REC, where borrowing fuels lending activities. A glimpse into REC's major borrowers and key metrics reveals a company poised for growth, with solid fundamentals and promising market indicators. Looking ahead, REC's ambitious plans to expand its loan portfolio and achieve net zero NPAs by 2025 signal a commitment to sustainable growth and financial stability. In conclusion, REC Limited presents a compelling investment opportunity, backed by its robust business model, prudent financial management, and ambitious growth plans. Conducting a fundamental analysis is crucial for potential investors to assess risk and reward. Share your thoughts in the comments below and stay tuned for more insightful analyses.